Today, we're diving deep into the new strategy from Tokyo Corporation, and let me tell you, this is a big one. This isn't just some minor update. We're talking about a whole new blueprint for how they're going to navigate a future of rising costs and shifting demand. And it's all in service of one seriously ambitious goal: building a city the world admires.
So here's our roadmap. We'll start with a record-breaking success that's actually forcing this change. Then we'll look at the new challenges they're up against, unpack their Creative Act vision, get into the nuts and bolts of their 3-year action plan, see how they'll measure success, and finally explore what this all means for Tokyo's next chapter.
All right, so to really get why this new plan is such a huge deal, you first have to understand the paradox they're in. Tokyo is coming off an unbelievably successful year, but at the same time, they're looking at the future with a whole lot of caution.
I mean, just look at that jump. It's wild. For fiscal year 2023, they're forecasting a record-shattering operating profit of 90 billion yen. That's more than double the year before. A lot of that was driven by the economy getting back to normal and a big wave of real estate sales. So on paper, you'd think, wow, things have never been better. But here's the twist. Even with that record profit, this is what the company's president, Masahiro Horie, has to say. He's not out there popping champagne. He's actually warning everyone that you can't be too optimistic about the future. He's pointing to things like inflation and labor shortages as major problems on the horizon. This isn't a victory lap. It's a clear signal to brace for a storm.
And that really gets to the core tension driving this whole strategy. How do you build on such massive success when the very ground beneath your feet is shifting? How do you keep climbing when you can see the weather is about to turn? Answering that is what this new plan is all about.
So let's drill down into the specific problems this new plan is trying to solve. Tokyo's taken a hard look in the mirror and identified some serious challenges, both inside the company and out in the wider world. They're basically fighting a war on two fronts here. Internally, they're admitting, hey, we focused too much on just getting bigger, and it's made us less efficient. We haven't spent enough upgrading the stuff we already have. At the exact same time, they're facing this perfect storm of external risks. Things cost more to build, interest rates are up, the real estate market could cool off, and long-term, Japan's population is shrinking. But listen, it's not all doom and gloom. They also see some massive opportunities out there. Inbound tourism is absolutely booming. People are craving real-world experiences more than ever, and new tech is opening up all sorts of doors. These are the tailwinds they're hoping to catch, not just in Japan, but in fast-growing markets abroad too. So, you've got these challenges on one side, these opportunities on the other. What's the big idea? What's the guiding philosophy for this whole transformation? Well, they've given it a name: Creative Act. And this isn't just some feel-good corporate slogan. It's really about a fundamental shift in how they think and operate. It's about moving away from just doing things the way they've always been done. The goal is to act with more creativity, more flexibility, and to really build innovative solutions for the future. At the absolute heart of their long-term vision is this concept of a circular business model. It's such a powerful idea. Instead of just taking profits from an area and walking away, the strategy is to take the money they make in a community, from their trains, their real estate, their shops, and pour it right back into that same community to make it even better. It creates a kind of flywheel, this self-reinforcing loop of growth and value. And this model works in 3 cycles. First, their core businesses, like trains and real estate, boost an area's value. Step 2, other businesses like hotels and shops make the area even more attractive and bring in new money. And then, for step 3, they take those profits and reinvest them into brand new ventures that make the area even more valuable, which starts the whole cycle all over again. That's how they plan to create what they call a conglomerate premium. Okay, a powerful vision is great, but how do you actually make it happen? Well, Tokyo is putting Creative Act into motion with some very real, very concrete plans over the next 3 years. First up, the ongoing evolution of their crown jewel, Shibuya. I mean, the development there is just relentless. Shibuya ASH just opened its doors, and they've already got 2 more huge projects lined up for 2027. The next piece of Scramble Square and the super high-end Shibuya Upper West project. Every single one of these steps is designed to make Shibuya an even bigger magnet for people in business.
But it's not just about building shiny new towers. A really key part of this plan is their value-up strategy, basically getting more bang for their buck from the assets they already own. Take their hotel in Hakuba. They renovated it, combined 2 small rooms into one big luxury suite, and more than doubled the nightly rate. That's the kind of smart, targeted investment they want to do across their whole portfolio.
The plan also looks well beyond Japan's borders. Tokyo is putting some serious cash into overseas expansion, especially in real estate in these high-growth markets like Vietnam, Thailand, and Australia. And none of this works without the right people. They get that. They know their human capital is the real engine of the business. So they're rolling out a whole new people strategy. We're talking competitive pay raises, more options for employees to move around and build a career, a huge focus on reskilling, and a big push to just get everyone more engaged. They know that creativity has to start with their own team. All right, let's talk about the bottom line. A strategy is only as good as the results it gets, right? So how is Tokyo going to measure success? Well, they've laid out some crystal clear and pretty ambitious financial targets. By fiscal year 2026, they're aiming for 95 billion yen in operating profit. But what's really interesting here is the shift in focus. It's not just about size anymore. It's about efficiency. That's why they're putting so much emphasis on metrics like earnings per share and especially return on equity, or ROE. And here's the headline number you need to know: an 8.0% return on equity. ROE is so important because it's the key measure of how well a company is using its shareholders' money to actually make a profit. By making this the main goal, Tokyo is sending a really strong signal that capital efficiency is now the name of the game. And they are absolutely putting their money where their mouth is. To make all this happen, they're planning a massive 510 billion yen investment. That's over $3 billion in just 3 years. But they're also promising to be smart about it. They've set up a financial guardrail to keep themselves in check. They want to keep their debt to EBITDA ratio at a healthy 6.1 times. This keeps them financially disciplined, and it also gives them the firepower to buy up good assets if the market takes a dip and other companies have to sell. So let's pull all these threads together. What does this all mean for Tokyo's future? What's the big picture takeaway from this really ambitious new plan? The simplest way to think about it is as a fundamental pivot. The past was all about growth through scale, just getting bigger, expanding the railway network, adding more buildings. The future, as this plan defines it, is all about growth through quality and efficiency. It's about making every single asset work harder, delivering higher value, and just operating a whole lot smarter. And what I find really fascinating is that they're being very open about the fact that they can't do this all by themselves. They're basically sending out an open invitation, not just to investors, but to other businesses, to developers, to creative people. They're saying, come join us in this long-term project of city making. Bring your know-how, bring your ideas, and let's build something amazing together. And that leaves us with the ultimate question, doesn't it? Tokyo has laid out this really compelling vision to pivot from just being big to being creatively efficient. But, and it's a big but, in an era of high inflation and global uncertainty, actually turning that vision into a city the world admires, well, that's going to be the ultimate test of this new act.